In 2017, we then went from around 1,000 to 20,000. So just to show you guys the equivalent, if that were to happen of same scale, we would go from around 100,000 to $2 million per coin. Do I think that's going to happen? No. My prediction is still 250,000 to $1 million at some point next year. But just to give you guys, like, listen, I've been here. I've been around for a long time. I've been in Bitcoin for 12 years. I think 100,000 is a big round number. We'll take our time here. Again, markets go down as quick as they go up. So if you have a market that goes from 0 to $1 million in one day, it's going to come down just as fast. So Bitcoin is consolidating and building a lot of strength here. It's actually very impressive.
Bitcoin's recent surge past the $100,000 milestone has captivated the crypto world. This psychological barrier is not just a number, it's a turning point that could reshape the future of cryptocurrency. Jack Mallers, a prominent figure in the crypto space, sheds light on what this milestone means and what could come next. According to him, the $100,000 mark holds immense psychological importance. As a large, round number, it serves as a benchmark for both long-term holders and new investors. Many early Bitcoin adopters might see this as an opportunity to cash in on their gains, which could lead to a temporary price stabilization or even a sell-off. Mallers emphasizes that markets need time to adjust after hitting such significant milestones. A brief pause or recalibration period might occur, where investors evaluate the next steps. This behavior is typical when markets hit major psychological levels, allowing for consolidation before the next upward movement. As Bitcoin crosses the $100,000 threshold, the market's response will be critical in determining its next moves. Whether it stabilizes briefly or accelerates toward new highs, this milestone marks a pivotal moment in Bitcoin's journey. As we bring you clips from Jack Mallers' recent podcast, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy the video.
Remember what I said? I thought $100,000 was going to be a really important level. It's a big psychological level. And also, for the record, we just went straight up like this. You see my arm? This is good education right here. You see that? Straight up last month. We went up 40% in a month. Markets need time to calibrate. Markets need time to sell off. Markets need time to calm down. $100,000 is a round number. If you ask someone that bought Bitcoin a long time ago, when are you going to take profits? They're not going to say, oh, I think $96,200 or $78,400. They're going to round number, $100,000. That's why markets like round numbers. Markets are comprised and made up of humans, just like you and I, right? And humans have a lot of emotion. So markets love round numbers. $100,000 is a really round number. It's a big psychological number. You're going to see a lot of sell pressure there. And I think the market is going to take a second to calibrate and get itself to push through. So everyone's always like, sailors buying all this Bitcoin. How come it's not going higher? I think you're underestimating the psychological level that $100,000 brings. Now, with that being said, should you try and time this market? Should you short this market? No. I only own Bitcoin. So for all I know, we could blast through 100,000 in this month, in a few weeks. Don't get it twisted. But the fact that we're a little bit below 100,000 doesn't surprise me. It does not concern me. It is all good. The last thing on this that I'll say, guys, is this is very classic halving behavior. Let me tell you guys a story. Back in 2016, there was a halving, okay? So the first halving was in 2012. The second halving was in 2016. So it was the second halving ever in 2016. I was there. And Bitcoin was trading, gosh, I want to say it was in the hundreds of dollars. I want to say a couple $100, $400, $500, something like that. From the halving in 2016, which was around spring or early summer, if I remember correctly, Bitcoin went from, let's call it $400 all the way to $1,000 by New Year's Eve, 2016. So it ended the year right around the time we're at now at $1,000. And that was a massive psychological number for us at the time. It was like, whoa, one Bitcoin, $1,000? No way. And a lot of people that were mining Bitcoin on their computer were cashing some out at $1,000. It was crazy. And Bitcoin dipped a little bit from 1,000 to open the new year. It fell down to like 800. And then in 2017, it went from like that 800 to 20,000. It went from, so that halving cycle, Bitcoin went from like 400 to 20,000, by the way. So that's like what, like a 50x or something like that. And it kind of reminds me of that, where we end the year at such a big psychological number, where you're seeing some selling, you're seeing some buyer's exhaustion, right? There's holidays, people that run and operate big funds and have big important jobs are taking time off, be with their kids, be with their family. A lot of people cashing out, taking care of themselves, celebrating. And you got this big psychological number. But in 2017, we then went from around 1,000 to 20,000. So just to show you guys the equivalent, if that were to happen of same scale, we would go from around 100,000 to $2 million per coin. Do I think that's going to happen? No. My prediction is still 250,000 to $1 million at some point next year. But just to give you guys, like, listen, I've been here. I've been around for a long time. I've been in Bitcoin for 12 years. I think 100,000 is a big round number. We'll take our time here. Again, markets go down as quick as they go up. So if you have a market that goes from 0 to $1 million in one day, it's going to come down just as fast. So Bitcoin is consolidating and building a lot of strength here. It's actually very impressive.
Analysts remain optimistic about Bitcoin's trajectory, with price predictions ranging from $120,000 to $200,000 in the near future. These projections are rooted in Bitcoin's limited supply and the growing interest from large-scale investors. Maller's insights suggest that while short-term fluctuations are possible, the long-term outlook for Bitcoin remains bullish. Factors like institutional demand, inflation concerns, and Bitcoin's capped supply are likely to drive its value even higher. Also, Mallers commented that Stark's speech was exceptional for its ability to condense all of the fear, uncertainty, and doubt into one sentence. Mallers did, however, point out that even if we replace crypto with any other significant technology, the assertion remains valid. According to a survey by Chainalysis, crypto crime did increase in 2022, although it still constitutes a small fraction of overall crypto transactions. Let's watch more clips from the interview.
On 60 Minutes, John Reed Stark, the former chief of SEC Office of Internet Enforcement, he said, every single crime you can conceive of is easier to do now because of crypto. And I'm going to go to my next slide here because the quote was remarkably impressive. I got to give it to him. It was impressive from the sense that he took every single piece of FUD, fear, uncertainty, and doubt, and somehow squeezed it into a sentence or two. He said, every single crime you can conceive of is easier to do now because of crypto, especially ransomware, human sex trafficking, sanctions evasion, money laundering. North Korea is financing their weapons using crypto. It was remarkable. So what I did, my first point on this is I went and I highlighted crypto here. You see how I highlighted that in orange? Because I think the main point and the first point is you can take crypto and you could flip it and swap in any other significant technology, and this statement would still be true. How about this? Every single crime you can conceive of is easier to do now because of the internet, especially ransomware, human sex trafficking, sanctions, money laundering. North Korea is financing their nuclear weapons program using the internet. Or I made another one for you guys. What about this one? Every single crime you can conceive of is easier to do now because of cell phones. Every single ransomware and human sex trafficking, these people, they're using cell phones. We have to stop them. If someone makes a phone call that's a criminal using an iPhone, we have to tell Tim Cook and shut it down. No, of course not. Listen, The reality is technology is neutral. Okay, I'm going to say that again. Technology is neutral. Bitcoin is software. It's open source code. It doesn't have an opinion. It doesn't lean this way or that way. It doesn't jump up or down. It's neutral. Human beings use technology and tools to do things. Now, they often aren't neutral. Human beings can at times be criminals. For example, the criminal's favorite money to use historically, according to data, is the US dollar. So the notion that Bitcoin is somehow advancing criminal activity is ridiculous and it's absurd. Bitcoin is a technology, much like the internet or even cell phones in this example. And it is neutral. It is advancing our ability to do things fundamentally, and it is a neutral technology, period. The guy went on to say and explain how because Bitcoin doesn't have a balance sheet, it doesn't have annual reporting, Bitcoin, the protocol, can't comply with SEC enforcement and regulation. It was like, listen here, hotshot. Oh yeah, FTX, they had a balance sheet. They complied with regulation. That stopped them from committing heinous crime, right? Wrong. What about Enron? They complied. The SEC and Enron complied. Did that stop them? Wrong. Every single bank on Wall Street was complicit and they complied in 2008, right? Did that stop them? Wrong. So all of the comments were ridiculous. It was almost as if this guy did it on purpose. It was crazy. It was like, how can you jam so many FUD buzzwords in one sentence? It was remarkable. He got up there. It's like legs crossed. Let me back up. This guy was such a doofus. It's like legs crossed. Crime is now better because of crypto. Ransomware, sex trafficking, drug selling, North Korea, Russia, world war, cocaine, fentanyl, border security. It's like, listen here, dude. Shut up. You don't know anything you're talking about. And you could take crypto in your quote and replace it with any technology, and it would be true.
Bitcoin's price explosion continues to defy predictions as the cryptocurrency approaches its all-time high of $102,000 on December 12th. This rising momentum is being powered primarily by the return of Bitcoin whales, who are actively purchasing the available supply. As a result, sell-side liquidity is fast decreasing, opening the door for a possible price spike. According to data from Material Indicators, a trading resource, whales are placing massive market orders to take advantage of the higher concentrations of ask liquidity. This increased buying pressure is forcing the price to rise, with Bitcoin adding to its strength from the previous day. The cryptocurrency's price recovery has been amazing, with a green daily candle near $5,000. The increased buying activity of whales is visible in market data, with large volume traders making huge purchases. This has resulted in a decrease in sell-side pressure, allowing the price to rise. However, popular trader Skew cautions that sell-side pressure remains high, which may restrict Bitcoin's potential rise. On-chain data account, the Bitcoin researcher contends that short-term holder profitability must slow for a price increase to be sustained. This is calculated using the market value to realized value (MVRV) metric for Bitcoin short-term holders. The MVRV statistic provides insight into the profitability of short-term holders, which can be used to gauge market mood. Meanwhile, the most recent inflation data from the United States has failed to hinder Bitcoin's momentum. The Producer Price Index, PPI, rose to 3% in November, exceeding predictions and indicating that inflation is returning. Some have speculated that the age of stagflation has begun, marked by rising inflation and labor market weakness. As we conclude, please drop your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching. Don't forget to subscribe.